My dividends have gone absolutely bananas, and this is the best month I've ever had in over 16 years of investing. In this video, I'll reveal all my passive income from both share dividends and premium bond prizes. And if you stay to the end, I'll discuss everything I've been buying and selling this month. From a fairly ordinary job, I've been putting spare money each month into dividend-paying companies and reinvesting any dividends received so the snowball can grow and compound over time. Right, let's jump straight into the passive income for June. This is not investment advice, and I'm simply showing you my own journey. On the 27th, I received some cash from Sage Group. The shares are down a touch this year. They pay a small dividend of 1.7% spread over 2 payments. As you can see here, Sage have a great track record of growing the dividend year after year. This month, Sage paid out a total of £10. To see how much I hold in each of the companies mentioned, I've listed the totals in the video description. On the 19th, it was the turn of RELX to reward its shareholders. The shares are up 7% this year, and this company also pays a relatively small dividend, and just like Sage, it's been growing that dividend consistently. A very good sign indeed. This month, RELX paid out a total of £70. On the 5th, I received a payment from Haleon. This company specialises in consumer healthcare products and was spun off from GSK a few years ago. The shares are more or less unchanged this year, and the dividends are moving in the right direction. This month, Haleon paid out a total of £80. If you're enjoying this video, then please hit that like button, as it really helps out the channel. On the 20th, it was the turn of HSBC to pay out. The shares are doing well, up 12% this year so far. The dividends are high at 5.7% spread over 4 payments a year. Dividends per share have shown some volatility over the years, but growth has returned over the last 4 years. This month, HSBC paid out a total of £130. On the 27th, my S&P 500 exchange traded fund paid out. The shares are down 5.6% this year, and a dividend is very small at 1.2% spread over 4 payments a year. I'm more interested in growth with this ETF rather than dividends. This month, IUSA paid out a total of £170. On the 30th, I received some cash from Imperial Brands. The shares are doing well this year, up 9.4%. It's another quarterly payer, and the yield is a very decent 6.7%. Dividends per share have shown a long-term upward trend. This month, Imperial Brands paid out a total of £185. On the 2nd, I received a payment from BAE Systems. The shares have done incredibly well this year as many countries across the world boost their defences. The share price is up 61% in 2025. The dividend is small at 1.8% spread over 2 payments. The company has been able to raise the dividend consistently year after year. This month, BAE Systems paid out a total of £250. On the 27th, I received a cash bonus from Tesco. The shares are doing well, up 7.9%. They pay a moderate dividend of 3.4% spread over 2 payments. Tesco has had some rocky years in the past, but things are looking much more positive these days with a strong and growing dividend. This month, Tesco paid out a total of £315. On the 23rd, it was the turn of Shell to reward its shareholders. The price is up 2.6% this year, and the dividend is above average at 4.1% spread over 4 payments. Dividend growth is progressing nicely. This month, Shell paid out a total of £330. On the 13th, I received some cash from Unilever. The shares are down a touch this year, and the dividend is fairly average at 3.4%. Unilever is yet another company which pays out 4 times a year. Dividends have shown a long-term upward trend, although it's been quite stable in recent years. This month, Unilever paid out a total of £340. On the 27th, it was the turn of BP to pay some dividends. The shares have not had a good year, down 7.8%. I've been buying more recently to capitalise on these lower prices. The dividend is a healthy 5.5% a year spread over 4 payments. As you would expect in the oil and gas sector, the dividend history has been rather volatile, but it's been increasing over the last 3 years or so. This month, BP paid out a total of £355. If you are thinking of starting your own dividend portfolio like I have, then Trading 212 will give you a free fractional share worth up to £100 if you click on my link in the video description. On the 26th, I received some cash from my FTSE 100 ETF. The price is up 6.8% this year and the yield is 3.4% spread over 4 payments. Here is the dividend history. This ETF has a ticker code ISF and this month it paid out a total of £420. On the 16th, I received my first ever dividend from Royce. I started buying it when it dipped below £1 a few years ago. It's now heading towards £10 a share and this year alone it's up 61%. The yield is very low at the moment, but it's grown to become the largest holding in my entire portfolio. This month Royce paid out a total of £520. And now onto the premium bond draw. I only use premium bonds as my emergency fund kept out of the market on purpose, so hopefully I never need to sell my shares and can allow them to compound over time. Any winnings are saved and then put back into the stock market during a downturn. The headline prize rate is 3.8%, but in the August 2025 draw it's falling to 3.6%. There is one draw a month, you have easy access to your money, there is a chance to win £1 million each month and all winnings are tax-free. The first £1 million winner this June was based in Edinburgh and held a maximum of £50,000 in bonds. The second lucky winner of the £1 million prize was based in Stockport and also held the maximum of £50,000. No £1 million for me this month, but I did manage to win 2 prizes totalling £125. The bar on the left shows my expected winnings this year so far with £50,000 invested, and the bar on the right shows what I've actually won. As you can see, I'm behind at the moment and it'll be interesting to see what happens as the year progresses. Why not hit the subscribe button to follow the journey? So the total passive income this month was £3,300, my best result ever. And here comes the taxman's claw to spoil the party. How much do I owe him this month? Fortunately, most of my investments are protected inside a stocks and shares ISA, but there just isn't enough room to keep everything inside. Sage, IUSA and most unfortunately Royce are all outside the ISA, and the total dividends from these companies came to £700. However, each tax year you have a dividend allowance of £500. This leaves me with £200 of dividends this month which I have to pay tax on at my marginal rate when I come to do my yearly tax return. So this month I've got to pay Mr. Claw £65. Now go away and empty some bins with that. Ooh, well done that man. Now yes, dividends are all very nice, but I also get capital growth on top. Let's have a look at the full picture for 2025. At the start of the year, the portfolio stood at 512k, and at the time of this video, it's increased to 600k. I've been using extra savings to put a lot more money than normal in when we had some severe market falls earlier in the year. The total I've put in this year is 22k. Giving me a net gain of 65k so far this year. So despite all the stock market turmoil in 2025, my portfolio has done fairly well. But of course, historical performance is no guarantee of future returns. And now for the overall passive income summary. The green bars show my passive income for the first 6 months of last year, and the blue bars are for this year. All figures are after tax, so you can see how much I actually get to keep. This chart shows how my average monthly dividends have changed since I started in 2009. This is just share dividends and does not include premium bond prizes. I find it really motivating to see the average monthly dividends rise over time. At the time of this video, I'm receiving an average of £1,468 per month in share dividends after tax. I'll shortly reveal everything I've been buying and selling in June, but first a quick look at the payment dates for the month ahead, and this screen shows all the shares which I own, which will be paying out dividends in July. This screen shows the highest yields in the FTSE 100. Those in red, such as Taylor Wimpey and Rio Tinto, have suffered recent dividend cuts, and this is sometimes a danger of investing in companies with very high yields. The average yield of the FTSE 100 is 3.4%. My own portfolio is even lower at 3%, but as I've been investing for so long and companies generally raise their dividends over time, my yield on cost is now 6.0%. So what have I been buying this month? Well, I've added more to my Developed World ETF. This one has the ticker code VEVE. This ETF gives you exposure to over 2,000 companies from developed markets and pays a small dividend of 1.6%. Ongoing charges are just 0.12%. I've also added more to my S&P 500 ETF. This one gives me exposure to 500 of the largest US companies all in one share. It pays a dividend of around 1.2% and the ongoing charges are tiny at just 0.07%. With individual companies, I've added more to Aviva. It pays a decent dividend of over 5% and the share price is on an impressive run. I've also added more to BP as the price has been a bit depressed at the moment, so I'm buying more shares to take advantage of these lower prices. If you want to see a breakdown of my entire portfolio, I've created a pie on Trading 212 which replicates it, and I'll leave a link to it in the description. Just a quick disclaimer that I would never recommend copying another person's portfolio because what might be suitable for them might not be suitable for you. As you know, in addition to my share portfolio, I also have premium bonds, and so does Mrs. Compounding Investor. To see all the prizes we have won over the last 6 years, then click this video here.